Good morning, everyone. Darius Dale here to present our macro minute for Wednesday, December 22nd, 2021. Starting with markets, we have stocks flat to up this morning, commodities up small, crypto flat, dollar down, global bond yields up. Big movers this morning, not a ton going on out there. NatCast up 1.5%, 10-year UK gilt yield up 4 basis points. On the economic front, finally, we've received some leading survey data that wasn't all delta negative for the month of December. So we had the CFIB Business Barometer Index out of Canada ticked up zero point 0.4 points to 62.6 in December. That's the highest print we've seen since August of 21. Brazil's FGV Consumer Confidence Index ticked up zero point 0.6 points to 75.5. That's the highest reading we've seen since October 21. Growth is still slowing where it matters most from a global growth perspective, however. You had the Eurozone's European Commission Consumer Confidence Index that ticked down minus 1.5 points to minus 8.3 in December. That's the lowest reading we've seen since March 21. Taking it to the chart here. So been tweeting about this convergence trade, obviously writing about it for the past week or so. I got a lot of questions. Okay, what does that actually mean? What it really means is that the stuff that's gone up a lot in recent weeks and months will start to underperform, if not have absolute negative returns relative to the absolute relative return, certainly relative to the things that have gone down a lot. And so, as you can see here from our dispersion analysis, is something we do every morning in our leadoff morning note. We look at the composition of the upper quintile relative to the lower quintile from a U.S. equity sector and style factor perspective, looking at 50 different sort of indices in the sample. And what we can see here is that there's a lot of outperformance in defensives and a lot of pain in cyclicals, particularly high short interest cyclicals, high beta, high leverage, those types of names. And so right now that spread between the mean of this constituent and the mean of that constituent is somewhere around 5 points on a month-on-month Sharpe ratio basis. That's a pretty wide spread in terms of the dispersion we've seen. So typically what happens in asset markets is people start to cover shorts, value buyers start to step in, people start to say, hey, this is getting a little too expensive, and you start to see a little bit of a convergence trade. And that's something you would expect to see. Just going back to the tweet I tweeted last night with respect to our CACRI consensus fear zone back test. We're also getting data out of South Africa this morning that shows Omicron carries an 80% lower chance of hospitalizations than prior forms of COVID. So you could easily see something like a pandemic is over type trade that spills over into Q1 of next year. So be aware of that. Don't be pressing shorts down here. That's a very dangerous thing to do in the context of this setup. So taking it to the probable range setup, overbought signal in the 10-year Swiss yield, 10-year gilt yield, nothing oversold. S&P 500, that's bullish fams, minus 1.7% of downside versus 4.9% of upside. WTI, bearish fams, minus 14% of downside versus 3% of upside. Bloomberg Dollar Index, that's bullish fams, minus 0.4% of downside versus 1.3% of upside. 10-year Treasury yield, neutral VAMs, minus 18 basis points of downside versus 12 basis points of upside. Bitcoin still neutral from the perspective of our volatility adjusted momentum signal. That's minus 12% of downside versus 8% of upside. Ethereum still neutral, minus 13% of downside versus 12% of upside. And then lastly, gold still neutral, minus 2% of downside versus 1.5% of upside. So with that, Darius Dale presenting our macro minute for Wednesday, December 22nd, 2021. Best of luck out there. Thank you.